Sir, yes, sir, people, we are back with another banger, people. Yes, let's bring it on in. Let's see if we can make this a quick little clip. Try to keep it at 15 minutes. It's a new challenge. But people, we're going to do a little discussion over what's occurring with our AMC stock, ape conversion, how I'm playing it, still agreeing, but we do have a little information. We had some family members kind of asking what the conversion rates, things like that. So we actually got that release letter from AA. But first, we're going to tap into a little clip with Charles Payne's about now being the time to continue, like I keep screaming, to accumulate in dollar cost average assets. We had one of the retail members, a brother by the name of Data Zero, a much love you, much respect, came in on one of our last videos and we had a difference of opinion as far as he's under the what's the word here? He's under the perception that now is the time to sell some of these names like Tesla, Apple, Nvidia, and we both had a difference of opinion on that. Again, if you're day trading or swing trading, which these are my long terms, maybe that might have been something you do to catch the highs and then re-enter back in. But as far as those that are long term of those, which what I recommend with those high pricing power bangers, then the time is now the dollar cost average. Because like I said, this isn't a crash, it's the healthy retracement. A stock going up 150% and retracing now 20 or 30% is not a crash. That's called the ebb and flow of the market. Like I said, it's a pivotal time to be dollar cost averaging and not so much being, let me drop. That's how you kind of end that generational wealth. This is the time to be dollar cost averaging. Apple's not going anywhere. Tesla's not going anywhere. Microsoft's not going anywhere. Amazon is not going anywhere. I guarantee in 2 years, it'll be a higher price than it is right now. And like I said, that's the imperative in the nature of how I trade those. Now, swing trades, we're in and out of those bad boys. But like I said, I feel like it's a good clip. So let's tap into this so we can get down our AMC information. Yeah.
All right, so we all, listen, flashback to December, right? The conservative approach, it was highly advocated by just about everyone on Wall Street. It just hasn't necessarily worked out. In fact, in some ways, it's been a disaster. For instance, stocks with the highest dividend yields this year, on average, down 3.5%. Now, listen, all right, they get dividends, so that might offset this to a degree, but consider that the overall S&P is up almost 10%. Mm-hmm. Here's what's going to make you a little bit upset. Stocks that don't pay any dividend up more than 20%. You can't make that up with the dividend, right? So the reason I'm bringing this up is we're entering a period right now where seasonally it gets a lot more choppy. The volatility should start to pick up. You can see how it really picks up from here. So you're going to hear a lot of people say, well, you want to hide out through this volatility. You want to go back to safety. And they're going to say, golly, that's what you told me in January, right? Fool me once? I don't know. Tell you what, let's bring in eToro U.S. investment analyst, Callie.
And again, like I mentioned last week, CPI, PPI data weeks, everybody should know that volatility is going to come. Stocks that are running the all-time highs are going to have a healthy retracement. The entire stock market was red and volatile all last week, which is what they were trying to hide and suppress AMC. They pushed all that up in there. Obviously, AMC and APE had no correlation with that, but they were using that overall market volatility to push the stock down as well.
Callie Cox, who's in the studio. Great having you come up. All right, so first, let me ask you about this. A lot of people bought dividends at the beginning of the year. You're just saying be patient as dividends. It's supposed to be a trade. I mean, what's the answer for folks who might have done this strategy and are feeling like, golly, I'm missing out?
Well, I think you just said it, Charles. I mean, dividend stocks are not a trade. To be fair, I think this is a sector story. I think a lot of the highest paying dividend stocks have sat in sectors that have done poorly. I'm talking energy. I'm talking defensive sectors, consumer staples, and healthcare. So it makes...
But not tech. You put a little tech in your tech, and tech, you can get a little tacky. I'm just trying to tell you, this is how it plays out. Don't play yourself.
Utilities,
right. That's another good one. But when yields are high and, the economy is kind of in doubt at the moment, but prices are moving higher, it's just not a good environment for dividend paying stocks. But if you hold them, you're probably not a trader, to be fair.
Right. And that's true. That's true. You didn't buy them for the first 6 months of the year.
Right.
Although some people might have, in their minds, they might have been pitched that way. All right, so we're here. If this is right, volatility may go up. Listen, the VIX is it's gone all the way down. Volatility starts to move up and down a little bit more. We get more of these 1% sessions on either side of the trade. Do you start to do anything different?
Well, we've had a pretty good call all year, to be fair. I mean, we've been really big on the quality risk, but not giving away risk at this moment. Where we are, I think investors are recalibrating their portfolios because the economy is stronger than a lot of people expected.
Bingo.
We don't know how long that's going to go. So we're still in favor of holding onto that quality risk, maybe looking for cheaper, cyclical
I'm going to come
exposure.
to what you're doing with your strategy in a second. Let me show. This is one of my favorite charts. You posted this about a week ago. I love it because the first year of a bull market since 1950. What do we see here? Well, obviously these are bull markets, but every bull market had its point, was tested. 1957 was the weakest test, right? Down.
Key in on this, guys. When others are fearful, it's time to be greedy. When others are greedy, it's time to be fearful. If you have the mass of people, yeah, it's going to crash. It's going to crash. No knock to data, a zero. But I'm just telling you, it's imperative that you look at the economy and what's coming in the future. I'm not talking about now. I'm not talking about today. This is the stock market. If you're not trading it as a day trade, then that's irrelevant. If you're talking long term, we're talking about a 5-10-year horizon. These companies are bankers.
5.6%.
It have been bankers.
There have been times down 14%, down 14%. For me, I look at this, I'm saying if this is the first year of a rally, and these rallies are usually multi-year, I just hung on for these 14% dips.
Well, yeah, it looks so obvious when you see it on a chart, but in reality, when things feel in doubt in the first year of a bull market, it's not so easy to hold on. When prices start selling off, you fear the worst. So it's important to remember. You have to remember how history works in the first year.
And during the most flooded time, the most fearful time, January of this year, I was in there collecting them. Now, again, that's that cushion. When Tesla was at 115, and I said, oh, I got to go in and strike. I'm not about to keep looking for $90. Well, now that it's up at 230 from 260 highs, right? I'm not, it doesn't feel like a sell-off to me because, again, I'm like, hey, I'm still up over 100% on these bad boys. Catching NVIDIA at 299, 300. We at 4, so, there has to be a retracement. We all know this about stocks.
Know, though, right? In the back of your
and
mind,
that retracement is the time for you to stack in some more coins.
We got a minute to go. I know that's not a lot of time, but your portfolio strategy, respect the bull. So what does that mean? Don't try to guess the top here?
Respect the bull. Don't completely let go of risk. The S&P 500 rises an average of 43% in the first year of bulls since 1950. But on a sector level, look at cheap cyclicals. Interest rates are high. People are looking for value. And there are two ways to make money, Charles: finding the growth, finding the value. People are looking at value right now. But hold on to that quality risk because this is a bull market. It goes back to respect the bull.
Right.
If prices keep moving higher, if the economy continues surprising us, then you're going to want to hold on to that quality risk and be prepared for a full recession.
Do you invest evenly across this spectrum, or do you cheat one way or the other? I mean, it feels like I feel I would be overweight the bull right now, but
right. Conceptually, yes, but look more toward these first and third buckets.
Okay.
And then maybe dip your toes in the cheaper cyclical sectors because these are longer term stories.
And there's like more insurance type stocks too. I mean, in this environment. Would you consider
but
that?
Energy, your financials, your stocks that tend to do well when the economy is really burning.
And and they're starting to show some life.
Yep, it is.
All right, Callie, thank you so much. Appreciate it. Great stuff.
Thanks
All right,
for
folks.
having me.
Oh yeah. Beautiful information. But like I said, it was just a great selection. Charles Payne always coming to clutch. At the peak of fear, you get a bounce back as you see stocks in these sectors are moving up. Guys, let's double tap down with our AMC play out. As everybody saw, AMC down about 4%, 33%. With a little bit of rebound after hours, we had a closing session of $3.39. Opened the market up today. Where did that, let me see here. Let me just check and see what it opened up at. Because I know we were in after hours, we were sitting up there towards like 380. Yeah, so we were around 380. Opened the market up. What's the price on this? Around 340. Made a slow decline around 339. Like I said, guys, I'm playing the arbitrage of this. 8, still, even though it's up 16%, not off. It's not where its highs were when we had this initial little conversion hike, but still sitting up around 17% at $2.08. It held that $2 level. As everybody knows, or what everybody thinks, is that they're bringing the price of AMC and the gap between 8 together. I honestly personally think that 8 is going to at one point pass by AMC before this conversion. There is news and talk that we shouldn't have to worry until around August 23rd, 24th, 25th. I think it's 24th or 25th. As we have 10 days, that's what they're saying, before that conversion goes down. But like I said, I don't trust AA worth a lick. So like I said, I'm prepared for anything. I'm prepared for a little sneak juke. Like I said, being in plays like COSM and GTI, we've been hit with that little, so you never know. Like I said, everybody said it needs to stay on a swivel. But pull on further, things are still holding steadily. AMC has 0 shares available. Again, nothing. There was no creation of shares at all. So like I said, it's an interesting thing that 8 fell. AMC still stays stagnant, but they're not pulling up any shares. Still sitting on the threshold security list as of yesterday. Today, marking the 35th day, we'll wait for tomorrow to get threshold security list, but most people are assuming that we're still on that threshold security. I personally was looking at this to try to see if they were going to try to do some sneaky deaky, but I don't think they're really too much worried about the failed delivers and all of that at this point, because they know that there's something in the horizon, as opposed to where that insecurity of not knowing was there prior to this conversion. Now, did they know a conversion was happening? Those are the things that we asked. Like I said, it was highly ironic how all of it played out with the price raising right before market close, where everybody's at work for a sell-off to happen. So it was like the algo released on Friday, and then it got chopped at the end of the trading session, going after hours. If they already knew, all right, good, we can relax down now, we can cut that algo off. Putting on through further, current ORTAX data, we're sitting at 27.55% short interest, a little bit off those all-time highs of 30.4%. Like I said, things are dying down. Personally, to me, it feels like the pressure, even though we're still currently there, even though we're still sitting at 93.21% short interest, 8.19 days days to cover, cost of borrow sitting at 253. We all know overwhelmingly, since they do have an out, that it hits a little differently, because it doesn't feel like there's I'm scared on the back end of that. But like I said, I am holding on to my AMC position. Like I said, I deleveraged to the point where I could diamond hand through everything. It's not nearly as many shares as I was holding about a year and 8 months ago. But like I said, that was for the betterment of my account. Because like I said, guys, this is just the beginning of our retail saga. But the name of this game is protecting your assets. You need to be investing in those bank companies. Greatest generational wealth transfer is underway. I keep screaming: Tesla, Nvidia, Microsoft, Apple, Amazon, XRP, Bitcoin, Ethereum, XDC for that play, XLM for that play. But like I said, super on XRP. And like I said, if you don't have a cold storage, go in that description, go get that Ballot wallet, get a 5% discount for $30. It is the best storage that I've seen. Is most simplistic, easiest to use, easy to go from your phone and utilize and look at it. You can order them from your phone and then keep track of them on your phone, but they're not, it's not like a Bluetooth thing. So you don't necessarily need that Faraday bag like I, said in a previous video. It might be good to have one for like if you are using things like the Legend Nano X, which I do like, but the Ballot, I haven't felt anything that has the same security as you be knowing it's literally a metal cold storage wallet. But let me pull on through, and we're just going to take a little quick look at some on the charts before we go out. But release from Adam Aaron. We've got those numbers. So we'll read down here. I'm writing to share my fellow shareholders. Here's the snake. I'm writing to share my thoughts with you about some exciting AMC news. On Friday, Delaware Chancery Court ruled that we can now immediately move to the proposals that were approved by shareholders. Right. A vote on March 14th, 2023. The proposal to increase AMC's authorized common shares and do a reverse split. So instead of before where it was a 1-for-7, now it's a 1-for-10. So for every 10 apes you have, it'll convert to 1 AMC. I do a reverse of a 1-for-7, 1-for-10 split of the AMC shares, which together will permit the conversion of all outstanding ape units into AMC common shares. We approve by 72%, right, of AMC shares and 91% of ape units, which I don't know how you can even vote as ape, but we're not going to go down the road. We already know this is fraudulent at the highest extent. They were actually voted in March the March shareholder election. Of those who actually voted, these are very large majorities in favor of our proposed actions cap, but no large scale voter is ever unanimous. Some of those in the minority continue to this day to be vocal of their opposition. Yeah, me. So I want to explain below to all of you, those who voted yes, those who voted no, and those who are still on the fence why we think we're on the right path. First and foremost, AMC should now be able to do additional equity capital. Basically, guys, he's just about to go down again, talking about how they're going to be able to literally sell off more of your shares to get more cash. You're not going to hear anything about AMC shares making more money. So they're immediately going to do the stocks, but they start selling shares. I mean, you just can't make it up. But somehow it's like he thinks hey, I don't know. But like I said, we know we have a portion of us that were yes voters, but here we are now. If you ain't got a clue, if it was so good for AMC, why is it down 34%? Okay, all right. Just get more of your money smothered. But like I said, this is a great thing. I'm glad this is happening so that at least we can have a line in the sand to end all that nonsense, the malarkey. And in the heads of those on YouTube that were screaming for that a yes vote, were kind of acting a little shysty towards their viewers, I heard, on these last couple of days. But like I said, people just run in and get trades over and over again, right? So you got people that screaming something real. They'll, no, you don't know what you're talking about. And then once it shapes out to exactly what it was, you know, those same people can't come back now. You don't see those people that was knocking everything we were saying a couple months in the chat. They just watching on the low now, because it's kind of like, well, this is what we explained. This is not something that you should really. The guy's telling you he's about to dilute your stock and sell some more shares. Where does that sound like making money, right? First and foremost, AMC should now be able to raise additional equity capital. We can use this to access equity capital to shore up cash reserves, pay down debt, invest in growth, initiatives to strengthen our operating profitability and pursue transformative merger acquisition opportunities. Now, mind you, they have $600 million in reserves. Share buyback? All right, never mind. When AMC has the capital to raise much needed cash, those rooting or betting against AMC face much more uphill climb. No, they don't. Shut up. And with the converters of AMC common shares and APE units, we hope and expect to be able to raise equity capital more efficiently and with less dilution than when APE units were trading separately at a significant discount of AMC shares. Well, my question is, why were they trading separately? What is APE? You know what I mean? But here we are. The steps we will be taking now are shareholder approved and mean the following to AMC. AMC will be more resilient. Were it not for our ability to have raised our equity over the past 3 years, AMC simply would not have survived the pandemic-induced decline of our business. No, we saved that company. Thank you for robbing us blind. Looking forward to the flexibility to raise equity capital and at the appropriate times is an absolute vital tool for any large company, and AMC is no exception. Anybody tell me we heard anything about him saying something for the shareholder here? 2, we eliminate capital raising inefficiencies of APE units trading at significant discount. I wonder why. These probably shouldn't have been created when the stock was sitting at $16, right? AMC shares converting APE units to AMC shares, resulting in a single price for all AMC equity. This single price eliminates the unnecessary higher dilution caused by lower market price of APEs. For the past 4 years, for example, to raise cash, AMC could only sell APE units. Key in on that, and they could only could be sold at a great discount to AMC shares. The guy just admitted now, guys, they did a split, sold the shares, smashed the price down of APE, and then complained about it being at a discount. You can't make this up. You really can't make this up. Let's see here. AMC can only sell APE units, and they can only be sold for a great discount to AMC shares. With the single equity capital structure, I believe AMC will be able to raise equity capital more efficiently and on better terms in the future. Guys, I cannot stand this man. And the thing is, it's so blatant and in your face, it doesn't make sense. But guys, just before we close out, I just want people to understand that the greatest generational wealth transfer is underway. You got to understand, the time is now to be dollar cost averaging these stocks. It's not no sell-off time. When in doubt, you need to pull out so that you can understand that a retracement back to supports. Let's see where we were at. beginning January 2023, where we were at 153. At a retracement back down from all-time highs of 480 to a 443 within a 15% move is not a time to sell. They're crashing. That's called a retracement. Look at the movement of the stock. This is a healthy pullback with all of these stocks. Tesla. Pull it on back. Tesla sitting at 239. We're below that 250 level. We're ranging anywhere from this 250 to this 225 level as far as supports. But Tesla is holding off better than what was expected. Put it on through. Let's go up here and see if we can pull this out. Where are we at here for the 23rd? Oh, yeah. All right. January 23rd, 102. We're sitting at 239. These are healthy pullbacks, test of supports, but it's holding its stock. It's still up well over 100-something%. This is not the time to panic. Apple. This is not the time to panic. When in doubt, pull out. Where were we at the beginning of the year? 123. You're sitting at 180. And off of the all-time high being 197 within 10 to 15% move. This is not a retracement. Where's that thing hitting? Right on the top where it's marked. That's called a support. Keep in mind, do not panic. Do not just be, so quick to sell on these long terms. This is why we have these diverge. I have an account for my short term, my swing trades, my day trades, my Weeble. Then I have a long term, which I keep my Charles Schwab. Long term, 5, 10, 15, 20-year horizon. This is the generational wealth transfer. This is the growth. This is what's going to grow slowly in the background, providing bang of cash and assets that you'll be able to move to your children's children, your children's children's children. You just got to remember now, if you look back out, all the way back down here, at one point it was $16 in 2014 on NVIDIA. You think the people that were holding with it was $16 that they would be panicking right now? Well, that's the whole point, is that you've got to start your generational transfer at some point. And there's no better time than now with AI, tech, EV space going off. There's the things of the future coming in. You've got to stay in that mind frame of what's next. Not now. We're talking about tomorrow and the next day and the next day and the next year and the next year and the next year. You understand? Guys, much love to y'all guys. Love y'all. Appreciate all the support, guys. Hey, we're getting close to 1,000. If you haven't already, I see there's a decent amount of people that watch that haven't subscribed. If you could, subscribe so we can hit that 1,000 mark. I think we're sitting somewhere around 970. Much love to y'all, family. Y'all know I love y'all, boys. Y'all know we're in this thing to the end of it. And what do we say, the end? To the end of time, guys. Just remember, you are one trade away from life-changing, wife-changing, family generational changing money. Like I said, that's what we're here for. We love it. We involved in it. Like I said, we're going to be in on it each and every single day. Much love to y'all boys, and y'all already know what's next, don't you? DJ Brandon, drop that beat. Yes, sir!